Hello guys, glad to have you on board again. Today we're going to do an express briefing trying to hold around 15 minutes, no more no less. What will we do regarding cryptocurrencies? I'm trying to figure out some tradable context in here. So the overall big context still remains a range to me in the 1 hour chart context. So I still tend to believe that this range is going to hardly be bullish, most likely a flat range or dynamic range in which we're going to break the lows and retrace. So hard to figure out the structure at this stage. Normally we should be able to, as we had multiple breakouts, each and every one of them failed so far, so it kind of blocks the range and shape it. But I don't see any reliable shaping structure in here. All I can see is an upward move, a downward move. So what would it be? The ignition of a second downward move? Possibly could be, yes, but that means we've got a target in here, and this target is going to block prices for at least 40 bars. So it will require us 40 bars to block prices before we could actually have a bearish move. So either we're going to have something like that, so we just die in here, straight line or horizontal prices before we actually manage to break down a second time to fill the gap or whatever. So I would say this area is dangerous. I can hardly see some risk management in there. So I would say just stand by on Bitcoins or find some suitable context to eventually trade something, like go lower time frames and see if you have 15-minute signals or whatever. But in this context, I don't see anything that you could actually trade. You've got a tight signal in here, but it's not breaking through context. So no, I would say just stand by. It doesn't nearly give you anything to do in here. No risk management. So we're in a range you would potentially be buying, knowing that the preceding movement was bearish, so means buying against the trend in a range. Yes, still that is possible. All right, you remember that the major strategy I would push forward in some stuff would be first range boundary, second we're looking for the third. So in here probably we've made 76% fib in there, so I don't know if there was a signal in 15 minutes or not, but this area could be buying the dip out of a third range boundary eventually, but that's all it could be. All right, it still remains risky because we still see that gap. So I would personally just pass on Bitcoins today, or scalp trade the volume areas with Bookmap. I'll obviously make you a podcast regarding Bookmap sooner or later, but just probably not today. All right. Aside from this, so yesterday was an ECB day. It's been a huge reversal for the DAX index, a huge problem. So we had this bullish momentum that came out of nowhere and for doubtable reasons. So now it's over. The market retracted itself, pulled back. So what is this? Is this just a short-term pullback, or is this something bigger? I would tend to say this is something bigger, because what I feared just happened. We reversed out of this trend line, and that is absolutely not a good sign for the future. Means bears could be setting themselves in the market and creating this evening star below this resistance after an Iceland reversal. It's twice a dangerous structure. So Iceland reversal in here in the caching market. Let me just highlight that. German index, where the fuck are you? All right, here. So Iceland reversal, big bearish engulfing with volume. So at some point, let's face it, we've got no good news coming from the economy. We've got nothing to support prices. The paradigm might be about to change. So what the hell? Yes, going down kind of makes sense, and at some point going down is just part of the market going up. So stop fighting this shit. All right, so I'm just waiting for these prices to actually confirm what I think. Strong reversal down the road. We'll see about that. VIX has been bought yesterday at the lows. My question is, how long can we handle this before the actual problems and the shit starts to hit the fan? Last time we were lucky, which means when we built the bottom, we had at least 1 week of making new historical highs afterwards before the shit hit the fan. It wasn't the case every time, all right? So let's be honest, at this stage we're pretty much late. As we said, early July we could have a dangerous timing for buying entries. So okay, if we just go right now or in a couple days, I think the market anyway is just going to wait for the Fed. Just like, because the new paradigm is just, all right, Feds and central banks are the leaders of the market. They are the one that makes the pricings. They're not. The market makes its own pricing, and it's market sentiment who's printing prices. So the market sentiment is just no one knows what the fuck to do. So they've been putting their lack of confidence into bigger institutions. That's exactly what they've been doing. We don't know what the fuck to do. So let's hope the Fed will save our asses, but they won't. All right, they're not. They can't be recession stoppers. It never happened in the past. So what the hell would it happen right now? So I understand the process, the psychological process that led us to this new paradigm, but I just don't goddamn understand how long it takes us to freakingly reverse it. Probably most of us know that this is not going to work and that this game is probably not reaching its end. But still, like we said, we never know for sure, so I don't know if this area is just, all right, we're out of the contraction cycle in VIX, and we'll just break this one down and break below the 10 on volatility. That's an option, but I don't nearly think it's an option. So, as usual, we're building this triangle. The cycles are getting faster and more dangerous. The next time we break, it's not going to make a lower high. All right, next time we're going to make a higher high, which means at least getting to 23, 24 in volatility. It's going to be a pain in the ass because the SPX going 24, last time we've done that is October 2018. So if you think that what we're going to get is a nice and smooth reversal just like we had it here, no way. I think what we're going to have is pretty much something like that. Like, as you can see, the prices are pretty much similar. Back in the days, too much people were saying, no, we're going to go higher, I'm not selling, and then bam, this is what happened. So, yes, I'm saying it out loud. I think it is about time to start selling more aggressively on the SPX. So I'll start piling some bearish entries right prior to the actual Fed meeting, because I think the market will probably retrace down to those prices, or at least down to those supports before hitting the Fed. But simply because the ECB has been disappointing the market some way, I wouldn't necessarily be surprised if Wall Street was about to send a message to the Fed like, all right, this is what will happen if you don't pay us. If you don't lower the rates, this is what we'll do. We'll go even lower. We'll teach you a lesson. So I dangerously think that the market could try to send a message, yes. And I don't nearly even think that this message is actually going to be resonance throughout the Fed. Because let's be honest, I don't nearly think the Fed should be lowering any rates, like not even once. If they do it, it's like a capitulation. If they do halfway through, like putting a 0.25 rate decrease, what would it mean? Like you're doing halfway through. So it's either you go all in, two fits, or you just do nothing. And if you do nothing, definitely the market won't like that. But do you have any reason to actually lower the interest rates? Actually, none of it. None of it. All right. So why should the Fed act? Simply because the market is asking for it? No, there should be no thing like that. So as we can see, very dangerous. The actual outcome will be because of others, actors in the market. So we need to risk manage facing this. That's what I'm doing. It's not easy. As you can see, Eurodollar yesterday tried to shake down, made new yearly lows. I didn't trigger my stop losses because I don't really think they deserve it. So we're still trading on top of this trend line, and as long as we do, I think the bullish potential still remains intact. So I'm patiently waiting. I think we do have this structure, which is a bearish wedge that we clearly extracted from the upside. This was no trap. If this would have been a trap, we would have reintegrated the structure in here and gone straight bearish afterwards. So no way. The fact that we pushed a divergence in here signals the bulls are in control. I don't want to trigger my stop losses just because we dip a toe into new yearly low territories. So until we manage to actually make candle closes below this low, I would stay the way I am. We've been overbought yesterday, so it could be just a triple bottom. All right, so I cannot nearly stress enough how stupid that is for us to get there. We should nearly have gone there, but we are, and here we are, and I cannot stress any difference. So I need to take accountance of this risk. But should I really trigger a stop loss just because we dip a toe into new low territories? I don't think it is. Right? I don't really think it is. So we didn't handle a positive close neither, all right? So we couldn't manage to have some decision out of the market. Probably is going to be today or tomorrow or on Monday at least. We should get back to equilibrium, I think, for the Fed, like playing halfway through it. where the indecision is at its maximum, so close to 1.12, 30, something like that. I think this is the area we're going to set ourselves for the Fed, and then the Fed either get us up or get us down. I don't know, but I see absolutely no reason for us, as the ECB didn't deliver, to try chasing the other bottoms. Right? I don't see any viable technical reason, neither fundamental reasons. It's just the market tries to take down some stop losses, and as you can see, it's been oversold yesterday trying to do so. So normally we should get to return to the mean. That seems to be what's the most probable scenario is. Regarding USD JPY, we've been crossing all along. My speculative area was in here, so we just got straight through it. So I generally don't like to sell in this market. We closed at the high, so probably an excessive move today. And the question is, it will probably lead us to the previous market top. So I don't know. My question is, either we're gonna just reverse in here, get to return to the mean as well, because the dollar is unwinding yesterday's move. That's absolutely possible. Or we keep on pushing, and we get to make new highs from those market tops. So still same thing in here. We're in a range. So far we retraced 38% fib. Are we on the verge to go 50%? That's an option. I don't know. Are we on the verge to build a triangle? Who knows? All I can tell so far is that we can clearly see two sets of waves. So what the hell's going to go next? Either we do two sets of waves, triangle, and then bearishness. Or I don't know. All right. So everyone figured out that everything is surrounding just one thing: the Fed. After the ECB. It's all about central bankers. So since when do we do market trading because of it? Never. So once again, this is a new paradigm. And do you really think it's going to last long? It can be lasting another few months, but no more than that. We will end this shit. Whether you like it or not, central banks cannot stop recessions, and they cannot force equity investment and stuff like that. Yes, some companies have a shit ton of cash available, but instead of investing it, they rather want to buy their fucking shares. Just like Google yesterday is starting a $25 trillion, $1 billion repurchase repurchase program. So that's concerning. They have shit ton of cash, and instead of investing, instead of rising wages or stuff like that, what do? They just buy their own shit. And I told you that, historically speaking, when share buybacks occurs, they occurs in two specific contexts, either because shares are just going to surge like shit, or because that's the end of economic cycles and they're just trying to hold the shit together before actual price drop. Simple as that. And I think that we're definitely in the second case. If we were expecting some growth to pick up, what the hell do you think they'll do? They'll just spend the money into innovation, research and development, stuff like that, instead of just piling up the cash to buy some shares. That's not what they do. What they do is that they want to reduce the number of shares, to reduce exposition to downward movement in a possible bear market. That's exactly what they do. Otherwise, they would just invest in the economy, or like I said, rising paychecks or whatever, instead of just giving money back to investors. So this is really a problem, all right? The way we spend money in the current market is very dangerous for the future. But you know about that. Anyway, AUDNZD is still working its one around its area, waiting for the goddamn breakout to occur. Since we don't have it, be patient, be resilient. This market is just freakingly lost because of, yeah, there is a dollar correlation. So we got to validation, but we need to break this area, all right? So we built the level. Next time is to get to validation. So anytime we get to break this level is where we'll get something nice. I would do it 1 hour chart. So anytime we get to break this level, I think the trade is going to be validated, which means I can put this one as stop loss at break even and reinforce again. Until then, nothing to do. Tesla, it's a panic selling. Obviously, it's not going to be great. There's absolutely no reason to buy, but the people are starting to question Musk's behavior once again, as it tells us that everything will be fine by the end of the year. No one even believes it. So obviously prices are going down, confidence is now broken, and I see hardly how this can be restored. Apple is pulling back, but who knows how long this will last. Once again, huge Iceland reversal. What the fuck are we doing in here? I don't understand that. Same thing as the German DAX or Iceland reversal. What the fuck did we pull back in here? I don't get it. These are not normal pricing, but this is the new paradigm, all right? We try to go as high as we can before we actually fuck it up entirely. Facebook, same thing. They try to take down my stop loss. Obviously, I didn't trigger it. Heavily divergent in here, reversed the market. So I think we're done with this. Hard to say where it's going to go, but we've gone way further than I would never ever have imagined. So in here, I think, bam, more bullishness, 30% drops down the road. Just to pull back to previous support. So if you think, oh my god, 30% drop, that's enormous, the guy is crazy. No, we already done that, and I think in here, and saving the dip in here would actually be bullish, because I don't think we'll be saving any dip in here, but most likely making new lows, which means recession trades, 45 to 50% drops, usual shit. You know about that. I'm working around this scenario for quite a long time. Nvidia as well, not good, bearish engulfing yesterday. Red signal, I think the bears are already in control, which means the bulls are really losing strike. In here, we might have a ranging mature structure. Remember, look at the trend channel. I'm not going full hour, right? To trend channel, to trend channel, to trend channel, to trend channel. So we've got fourth boundary in here. It could be looking like a triangle or whatever. So it doesn't look good at all, all right? Doesn't look good. In here we barely retraced 38%, so yes, signs of a very, very weak market down the road. Netflix, some people tend to believe that we're going to retrace and close the gap. Why would we even do this? The worst is just getting started for Netflix. Lots of competitors, bad inflows, so yes, there's a lot of bad news, and what would we even gap this thing? No, this is a breakout gap. Pure and simply, we're gapping below a support, so all we can do is pull back into this area, finding a lot of bears and getting below. So I see absolutely no reason but to actually even risk manage. But like I said, I got good prices on Netflix. I shorted it right at the top, so what the hell would I be profit taking in here? I have no risk management to make. I just put my fucking stop loss at break even and patiently wait for the shit to hit the fan. And I'll reinforce, obviously, so I'll be ready to reinforce if there are signals in this area. For now, I'm just standing by. Boeing, sorry to say that, shit is hitting the fan in here as well. So, yes, there is a lot of concern. Yes, the Fed really needs to save the market, but is that really their job? No, it isn't. And the Fed actually has absolutely no reason to lower interest rates, but to please the US administration. The problem is, this is monetary manipulation, because there is absolutely no reason they should do this. And if they do it, then that means normally the dollar should fall like shit. They can do it. They have some room to do it with the monetary flows they have. But yes, doing it means they're sending a message to the market, and that doesn't even nearly mean the market will obviously be bullish out of this, all right? It can be early bullish because of monetary devaluations, all right? If the dollar falls like shit, then obviously it can give some upward potential for some shares. But if that's just, if bonds are going down, I mean, normally if dollar goes down and bonds goes down, then that's not a good sign for equities. So some people tend to believe that, yes, we'll have exchange effects to get to rise valuations on asset, but do we really have that? Yes, but we do have some very concerning signals as well, and I'm sorry to say that, but the earnings releases, they're not good. People tend to say, all right, it's not that bad, we managed to beat some consensus. Yes, but the consensus was pretty fucking low, and the consensus was pricing in a recession, so 2 quarters of contractions in earnings. So yeah, it isn't that good that we're pretty much getting to the consensus. Some assets fill it, some other asset beat it, some other asset making worse. So huge concerns regarding those earnings releases. They're not good. They're absolutely not good. Anyway, that's it for today. I wish you guys a good weekend. So I'm obviously maintaining all my open position over weekend, except for the dollar, for the euro dollar, if we were heading slightly to the downside today, which I doubt. But anyway, all of this is covered by the huge positions I have on the gold, so it's pretty much not that big of a deal if I have to change my timing for the dollar, but I'm sorry to say that, but I don't think it is. So today is probably going to be building the dip, going resistance, and we'll see about that. So anytime, anyway, as long as we don't get to those areas, I have no concern regarding the US dollar. All right, so I'm just going to put an alert just in case. And I'm going to put a second one over the market top in here. As long as those two alerts doesn't trigger, I see nothing but waiting in this area, and as long as we trade on top of this trend line, I remain bullish biased. Bye guys, have a good weekend, see you again on Monday.